In this video, I'm going to give you the information that you need to trade the TQQQ on the daily time frame. In this video, we're going to cover some ground. We're going to look at what the TQQ is, what it is not, when to trade it and when not to trade it. The TQQQ is a leveraged product, which means there is more potential reward and there is more potential risk. So it is vital before you trade this instrument that you understand how it has performed in the past and what it is likely to do in the future. This is a chart of the TQQQ since its inception. Now we have about 9.5 years worth of data and we know a few things already. The TQQQ has not been tested in a serious bear market so far, and so it remains to be seen how it will perform. However, what we do know is the TQQQ has performed well relative to the QQQ, which it is the leveraged version of. With the TQQQ and leveraged ETFs in general, we have a few things. We have larger price increases when the price rises sharply. We have smaller decreases when the price falls sharply. And we have volatility decay and higher expenses. So we can see here that what the TQQQ is trying to achieve is 3 times the return of the QQQ over a single day. It makes no promises for what it is going to do over the long term. So in order to develop a trading strategy, we need to understand how the TQQ has performed historically. We know what they're trying to do, but let's see how they've actually done. So one thing we know we have got a lot of with the TQQQ is a strong uptrend. And I've got an example on the screen here from 2019. Now we can see in this case, the TQQQ returned 4.1 times the return of the QQQ over the same time period. Because remember, there are no guarantees about the amount of leverage over any time period greater than 1 day. Now on the screen, you can see a typical example of what happens in a sharp market fall. And there have not been that many of these over the course of the TQQQ's history. However, there have been a few. And in this case, what we're getting is 2.5 times the leverage over this time period. So in fact, the TQQQ declined less than it should have done if it was exactly 3 times leverage. Now in this example, we can see the other side of the TQQQ. This is price decay. When we have a choppy market, we see that the TQQ declines faster than it should do compared to the underlying QQQ. Now this is the danger. This is the problem with leveraged ETFs. If we just sit on them, we come to periods like this and we can see our advantage disappearing. We can see from this analysis that we have to take advantage of the strong price moves that historically we have had in the TQQQ. So what I've come up with is to use momentum. Momentum is an indicator that measures the change in close price over a fixed period. So what we can see is that we know if momentum is crossing the 0 lines, it's retraced from a relative recent weakness and we are going into a period of relative strength. We can use this and we can have a look at the chart here and see that all of the big moves, or almost all of the big moves, are preceded by a crossover in momentum. Now there's another factor that I'm going to use in this trading strategy, and it is something that I've looked at before, and this is volatility. Now I put a video out recently on a video called Volatility Retracement Strategy. There's a link below this video and on the screen at the moment if you want to check that video out. And how I'm going to use volatility in this strategy is very similar. When we are trading long, we want to limit the amount of volatility that's going on in the market. Now on the screen at the moment, I have the inputs and the results of this trading strategy. Now this is a trading form backtest model. It is a way to test all sorts of different trading strategies. If you want more information, there is a link below this video and you can also click the link on the screen. So I'm going to go over some of the inputs, but I'm not going to do it in detail because I'm going to record another video that will go into detail about how I developed and optimized this strategy. So stay tuned for that video. So what I am going to show you is, we've talked about the entry. Entry is one part of a trading strategy, but the exit is just as important, if not more important. So we have a number of different exits. We're using a profit target based on the average true range, so it adjusts for volatility. And we're using a high profit target of 15 and a stop loss of 1 times the ATR. So a theoretical rewards the risk of 15 to 1. However, we have two other ways to exit this position. Now, the first one of these other ways is the trade informed strength close, and this is basically 2 consecutive days with at least a minimum daily gain, in this case 3%. Now 3% is quite a large daily gain for most markets, but of course the TQQQ often does that, so we have a nice way to get out when we've had a decent gain. We also have a type of trailing stop, but this is actually based on the close price, so it is the cumulative price decline from the recent high. So if we get to a certain point, close to close, we've declined by more than, in this case, 10%, then we will also close the position. So we've looked at entries, we've looked at exits for this strategy. We also have a filter. I'm using a set number of periods of 11. This is 1.5 times the standard deviation of the average amount of volatility. And volatility I am measuring by the standard deviation of the daily change. You can also see here I've got a short volatility filter. Now I said there's not going to be many short trades, and indeed there isn't, but there may come a time at some future point when we do want to short the TQQQ. Impossible as it is to imagine at this time, as it sets record new highs practically every day, but there may well be a time. So we do have a function to model short trades as well. However, at this time, the model is set to long only. I said at the start of this video, I wanted to show the difference between trading the TQQQ and the Qs. So I'm going to show you exactly how to do that. I'm going to go here, look at the historical data here on the left. Got a spreadsheet here containing the Qs. I'm just going to copy and paste that into the model here and click on Start Backtest. And we can see that we've automatically got a trading strategy that, in all honesty, performs pretty similar, which is a vote of confidence in the TQQQ of tracking pretty well because I developed it on that market. We only need to make a couple of changes to reflect the smaller daily movements, and we have a strategy that actually looks very similar indeed, using exactly the same profit targets, periods and amount of volatility. So we can see here that we've actually got a net profit that is similar. Now, one of the reasons we are getting a similar amount of profit is because we're using the average true range to adjust the stop loss and profit target, and consequently the position size. So I'm using what shows up as here as 3 times the leverage. I hope you've enjoyed this video on the TQQQ. As I mentioned earlier, stay tuned for the next video in this series, and I'm going to delve deeper into how I developed this trading strategy on the TQQQ, how to optimize it, and what are the good points and the bad points about this trading strategy. If you'd like more information, if you'd like to see more videos like this, please hit the subscribe button. If you like this video, please do hit the like button. And if you want more information about trading the financial markets, please go to tradeinformed.com.